Today was another really interesting day in the equities markets as Powell testified before the Senate about an incoming recession, the housing markets, the effects of inflation, and I separate those two because they are not the same thing. And anyway, the markets rallied like crazy on the appearance of Powell, but I don't think anything he said was really all that bullish. So let's hop into the charts real quick. I have the big four pulled up: SPY, IWM, VIX, and AMC, and I said yesterday to watch the open, and we actually had a bunch of gaps down, or at least we did an SPY and IWM. Both of the ETFs opened much lower and then began to rally when Powell appeared and began to testify before the Senate. And that momentum was lost throughout the day, and we actually saw a test of a downtrend in SPY and a rejection. Look at this wick, and volume was low on the day. IWM did a similar thing. It actually set a lower high and a lower low. So I am thinking that we're going to have a downtrend continuation, and this could even take us all the way down to 144. But it's a little too early to say that, not until we lose this corrective uptrend, and that's important to acknowledge. Now listen, if the price breaks below that corrective uptrend, then it's likely that we'll see 144. And if we don't see 144, we'll probably see, let's see here, whatever 170 minus 144, 26 minus 13, so 150-ish. I can easily see the price going into 150 and then staging a bottom there next week. SPY is probably going down to 350. So I would say I would expect to see 350 and 150 for SPY and IWM respectively before we actually see the bottom, because this just doesn't look like a bottom to me. Does it look like a bottom to you? It doesn't look like a bottom to me. Not at all. It doesn't. I'm expecting a high volume event to signal where the bottom is, and this just looks like a pit stop, and well, there's probably more downside to come. VIX, we had a bullish hammer. It was red, but this is a hammer, and it's not quite like a stock. We did have that gap higher as the ETFs, SPY, IWM opened lower, but then that reversed throughout the day. I kind of suspect that this will come in strong and green tomorrow. I thought it'd be strong and green today, but Powell kind of threw me for a loop. I didn't think he would have as much effect on the markets because it wasn't like he was having a press conference about the Federal Reserve, like meeting notes or anything like that. Nonetheless, we come to AMC and we have a massive wick. This actually constitutes a breakout, a trend reversal. We have a 1, 2, and 3 wave push higher. We did set a higher high above this candle here. That was on the 15th of June. And you would think that'd be bullish, right? But actually the price got rejected pretty hard, closing within the prior day's range and just above the close. This means that AMC is very likely to push through past this corrective uptrend and move down lower towards $11.50 or $12 by the end of the week. This is a big deal. I want to go into some bigger charts really quickly. Let's go flexible grid. So the thing about AMC is this is a shooting star, which is bearish. Bukowski says that this is a bearish reversal 59% of the time. He considers that random. I'd like to round up to 60 and say, hey, it's probably going to turn down tomorrow. Probably going to turn down. The RSA has been in an uptrend, but is failing to rise above 50. I kind of expect this to break out and down in a big way. Volume was just so low. Implied volatility implying that this was not a rally at all. And the MACD, the MACD, you can see the histograms. It's getting lower and lower. The bulls are running out of steam here. I mean, these averages are below zero, but that's probably because of this big decline we had. Nonetheless, even if these averages, these two lines were above the histogram, it would still look bearish, right? Well, it's more bearish because these averages are actually in the bearish side of the oscillator. So it's not looking great. Okay. That said, I want to hop into the 1-minute chart on AMC because the daily price action was very interesting. Look at that. Just came down, touched that corrective uptrend, and closed above it, bounced on it just barely. I'm going to go ahead and pull up a different set of drawings here. I did have I had someone claim the right at first. WPGDCUO. There you are. So today we started with an A, B, C corrective push higher, and then a big consolidation pattern, which eventually failed. And we had this measured move down, which was composed of a first initial downtrend, and then this weird, I don't know if it's like a reverse triangle or what, but it was preceded by another push down of equal height down to 1250. So I'm thinking moving into tomorrow, we're probably going to see a test of this downtrend, and it's not too much further to get to this larger uptrend either. So all in all, I'm thinking, yeah, bull trap or bounce. It looks like bull trap. It looks like bull trap. I'm following this broadening descending wedge, and I just went ahead and drew it according to the candles, the tips of the candles. And you can see that the price didn't reach the top, so this would technically be a partial rise, which is bearish, and the price is now starting to stair step down. Again, tomorrow's open is going to be very important, and we don't have Powell coming out. Well, he might actually be talking tomorrow too. I can't remember. Anyway, that's something to look out for is Powell. He messes with the markets all the time. Not like he means to. Nonetheless, so that's what I wanted to cover. Oh, let's not forget GameStop, though. Can't forget GameStop. I mean, GameStop is... I mean, that looks more bullish than AMC, doesn't it? You know, to kind of have like a flag through here. Yeah, that looks better than AMC does for sure. But it's going to have to break above this downtrend in order to really establish a bullish push higher. If it does break that downtrend, I mean, it's off to the races. If this is a measured move up, but I think we already had our measured move up. 1, 2, 3, 4. We could be in a motive wave 5, and that wave 5 could truncate against this uptrend before settling down and spilling lower. I mean, the MACD is starting to move down on this time frame too. And if this is a price mirror, well, this big dump should follow. But sometimes these price mirrors, they turn out to be like reversals. Like you'll have a big push up coming in, and you have the price mirror, and then the price will boom shoot up out and higher. That'd be cool. That'd be really cool. But I don't see a reason for it to happen, and that's just the truth. Is it looks like more of a corrective bounce than a bullish setup, in my opinion. And that's where I'm at right now. The markets are just falling, and the last 4 days have been pretty green for the markets in general, but I don't expect that to last forever, and I don't think we've found the bottom yet. It is possible, but unless Thursday and Friday are spectacularly bullish, I'm still bearish. My bias is still bearish. I don't have a reason to be bullish yet. Not at all. So I'm going to go ahead and sign off. I know that this video is kind of repetitive because yesterday was kind of the same thing, right? Where it's like, hey, watch the open, and we're generally bearish. We haven't made any breakouts, but that's how it tends to go on the day-to-day. So if you want to see more content, more analysis, tune in on the weekends. You know, this last weekend I put out a lot of analysis about Bitcoin and gold and SPX, the big market cycles and the Elliott wave patterns. Go check those videos out. The idea is that on the weekends, I'm going to be releasing content that only needs to be watched once per week. So it'll be a little easier to follow these longer trains of thought. And these daily videos are just quick and dirty dumps. Like, this is what happened. This is what it looks like. Okay. And that's where I'm at. So that's what happened. That's what I saw. Happy trading.